We think so. It's funny, I had a client that was in the office just before I came here to the studio, and they asked me, if things are so solid, why is the market reacting so crazy? And I said, sometimes I think we make the mistake of trying to find a rational reason why a very irrational market does what it does. The fact is, corporate profits are really at an unprecedented level right now. So to see this pullback, we don't think really is indicative of a long-term pullback. We think it's just profit taking after a long period of time where we didn't have any real volatility in the markets.
So Dory, if you have somebody who's maybe a retail investor, they saw that there was a big sell-off in the Dow this morning. They're tuning in now. They're trying to understand what exactly is going on in this market, whether they should be changing their allocations in their portfolio. What would you tell them?
Well, long term, I think you got to be careful. It's a good time to have cash right now. But all of this is fairly predictable. I think a lot of people predicted a lot of weakness in the market coming in the late weeks of September. And I think we can expect this all the way through the election. So I'd be very, very cautious about coming in, even if I was bullish about fundamentals. Volatility tends to breed more volatility at times. And we're not going to have any certainty in this market until after the election.
Robert, energy was the worst performing sector today. Would you be a buyer or a seller?
I would be a buyer. I really like energy. I like energy. I like financials. I was listening to Bob a few minutes ago, and I agree with Bob. I think that now's the time to start to nibble on some of those sectors that have gotten beat up the most. Now, to the last guest's point, I would agree that we might continue to see volatility certainly through the election, but we think that there's some real bargains to be got in the market right now.
Dory, the election's a couple weeks away. So, I mean, if you really think it's really a matter of a little bit of turbulence in the short term after we've already had the broad U.S. market down about 7% in a month, is that really what you want to be orienting your entire allocation toward? Or just what do you think in practical terms an investor should be doing right now?
In practical terms, I think we ought to be careful. You know, we all get greedy and we want to time the market and try to get our entry point. But why not wait for the moving average to move up? Why not wait for a little bit more stability? Every year after mid-election since the 1950s, the market has gone up on average 15%. You know, that's pretty good. All the other off years have averaged less than half of that. So why not wait for the trend a little bit, perhaps right after the election? And sure, maybe the market picks up a little bit, but at least you're catching a ride wave up rather than trying to time the bottom and missing it.